Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. All right, my next guest is Nick Santiago. He is the president and CEO of In the Money Stocks. Nick, thanks for coming on to the show.
Always great to be with you, Michael. Thank you for having me.
My pleasure, and thank you for all the blogs and the videos you're putting up. They're really doing a lot of good for us. Appreciate it.
Excellent. Very good.
All right, FXC, you want to start off there today?
Yeah, I wanted to start off with that because last week I was on your show and I had talked about that looking like it was going to pull back a little bit, and if traders are trading the dollar versus the Canadian dollar, you could see that caught a bounce as well. So I think it has a little bit more that FXC could pull back a little bit further. I would be a little bit careful with that one. Don't look to get back in it. And if anybody played it via the U.S. dollar versus the Canadian dollar, so far it's done everything we expect it to do. So those of you looking at the FXC, watch for support on this thing if it gets to around the 99.60 level.
Okay, got that. And then you brought up the U.S. Canadian dollar. Is there some trade there?
Yeah, I mean, the same thing there. Right now, that has caught a pretty good bounce. Right when we talked about it on your show last week, I said that this is poised for a bounce here, and that one has upside potential to basically around the 99-cent level.
Okay. All right, I'm looking at it, 99
yeah,
cents.
Make it 0.998, right around 0.998. That will be its upside objective.
Okay, got it. All right, that sounds good. All right, let me move forward into the other topics that we're going to talk about. And you've got a question. Nevada, one of your big fans, wants to know about a 10% pullback. Let me get this up here and let me read it properly. Nevada says he wants to know are you still looking for a 10% correction in the market, or will it be deeper? When you talk about the equity market, I'm sure.
Well, I think overall this year in 2012 it will be deeper. But however, right now we're at a real sensitive point because we just put in our first top, and now we're looking for the second top, which could be double top. Maybe the market spikes above the high. I'm not expecting a new closing price on the S&P 500 above the 1422 level. However, I do think we're going to make maybe a double top or a series of lower highs. And then as we make these lower tops, the market will make new downdrafts or new lows going forward. However, right now, the markets are holding up pretty well. And, I'm the one guy to tell you the way it is. If I think these things are going to drop real sharp, I'll come out and put my neck on the line and tell you. But right now, these markets are holding up very well until we take out that April 10th pivot low. We're gonna make these lower highs and then slightly lower lows.
Okay, that's my numbers are telling me there's a possibility of us driving into a buy point tomorrow, which would give us our final leg of the fifth wave and a real good place to short it as we get into the middle of the month. I wanted to ask you your opinion on that setup.
It's very possible. It's always very tough when you're dealing with the possible 4 or 5 wave. You don't know really, where you are here. The job number is tomorrow, and everybody's eagerly awaiting it. I have no idea what's going to happen tomorrow. All I'll know is that by early next week, I'll be looking to short this market.
That's what I wanted to hear. All right, TLT.
Okay, TLT, I bring it up because we always seem to get questions from your listeners about this. I know we had some real nice successful trades in the past with it, and I've shied away from it a little bit. But what I'm seeing on the TLT right now is that it's starting to base. And I think it needs a little bit more time in the oven here going sideways. And the longer it bases, the more potential it has to move higher. But I'm actually starting to like this pattern. And, if I see something significant next week or even the week after, I'm going to let people know in my trading room and also in my research center on my website. So just giving traders a heads up that this is starting to really base nicely for another significant push higher, maybe into the 122 to 126 levels. Right now, it's not ready yet, though.
Okay, that would tell everybody what that means. If we went from 117 to 122 on the TLT, relative to interest rates or bonds or the economy, what would that mean on a fundamental basis?
Well, it would mean there's money running into bonds because there's a lot of fear out there, and probably within Europe and maybe Asia. I don't think it would be good for the equity market. However, If you're looking to get a loan or something like that, you're going to get lower interest rates, and that would be a good thing.
Okay, so this is further fodder for the possibility that people would be going into a flight to safety in the near term with this basing pattern that you're talking about on the TLT.
Absolutely.
Okay.
100% correct.
I just wanted to cover the fundamentals on that. All right. Now you also wanted to cover the transportation index?
Yeah, I wanted to cover the transportation index because this, I don't know if anybody saw it yesterday or a couple days ago, I believe it was. Dow made a new high, and I don't know if anybody follows Dow theory, but the Dow Jones made a new high, I believe, on May 1st, and, has pulled back off of that. But the transports did not make a new high. And today the transports are selling down by about 49 points. That's always, whenever you see that divergence there, you always want to take note of it. And it's also telling us that the transports are showing weakness up here, even though they're close to the 52-week highs. I'm seeing these transports still continuing in a range, but it's something that every trader should look for, because when the transports move higher, it's a sign of economic expansion, and when they move lower, it's a sign of economic contraction. And right now, I really don't see a lot of upside for these transports, and I think they could easily come back down to the 5,100 level shortly, and that would be on the Dow Jones transportation average. Okay,
yeah, I'm looking at it, and on a longer-term basis, just to fade back and get a bigger picture for me, the MACD seem to be tipping over, and it looks to me as though that, what is that, the 50-period moving average on a weekly basis is right there where you were talking about.
Mm-hmm. And you have a huge MACD divergence potentially here. So, I mean, if these markets do start to come in, I mean, this thing, could trade significantly lower. So it's just a red flag. It's just a warning sign, and, something I just wanted to share with your listeners today.
Are there any shorter-term trigger points that you're thinking about would really put you into the bearish camp on this index?
Well, right now, so far what this thing has done, it's gone up to around the 5,400 level, and it's come down basically to the 5,050 level. And it's been in that range. But the one thing that I've noticed is that it really is struggling to get through the highs. And when things can't go up, they're only got one place to go, and that's to go back down. So if I see some kind of a real strong sell on good volume, then, it would really get me very bearish on this.
Got it. All right, we only have about a minute left. Which one would you prefer to talk about, the IYT or the JPM?
Let's talk about JPM, because the IYT is basically the transports as well.
Okay.
So JP Morgan today is trading, just lower by 20 cents. But one thing you've seen on JP Morgan since it really put in its high on March, I believe it was March 26th, it put in a high around $46, is that we've been making this basing pattern. And if you make a basing pattern, and you can see a big sell-off day on JP Morgan on the 13th of April, we have not been able to get through that high from the 13th, which is $44.95. JP Morgan is telling me this thing wants to go downtown to around the 41 level, and then ultimately even lower towards $38, possibly even $36. Right now, the way these markets are, you just got to take one level at a time. I can't get overly bearish and say, hey, we're going to go through this. But I do think JPM has a downside target to around 41. Even if you don't short the stock, it's telling you what could be coming for the markets as soon as early next week.
Got it. All right. Before we go, do you have any webinars coming up in the near future?
I don't have any webinars. We did have one this past Saturday, a teaching webinar. But each and every week on Sunday night and also on Wednesday night, we do hold an open forum for all the members to come in to our trading room in the evening and ask us any questions about any stocks, any commodities, any indexes, and we go over that pretty much in depth twice a week, as well as you get our nightly videos in our research center. That's all included. So I always tell you, listeners, come over, give us a test drive. We offer a 7-day free trial. Take our research center. If you're a day trader and you want to come in and watch our charts each and every day, come over, take a free trial to our intraday stock chat, and you'll see what we're all about.
Give us a web address.
Web address is inthemoneystocks.com, and shoot us an email at supportedinthemoney if you have any questions. we'll be happy to get back to each and every one of you.
Thanks so much, Nick. I'll talk to you next week.
Have a great one, Michael. Take care now.
You too. Everybody, Nick Santiago, President and CEO of InTheMoneyStocks.com.